write the thematic stuff, do the forecasts.
How was your? I saw you were hosting Chancellor of the Exchequer a week or so ago. How did that go? Wasn't it the day after Keir Starmer had resigned?
No, about 2 days before.
2 days before. You had her on your. Was it the Peel Hunt conference or something?
It was at Peel Hunt conference. We had Robert Jenrick the day after.
Oh yeah.
We're off the record still, aren't we?
We might be.
We might.
We normally do a soft open, but
we do a soft open. Okay. Rachel Reeves was extremely candid, more candid, I think, than people might have anticipated.
Okay.
And I would say 3 things that stood out for me were on energy. She said plainly, I'm not in favor of or, I'm in favor of and. And this was a question around, do you think that we've chosen the wrong side of the trade-off on net zero?
Did you ask that question?
I asked that question. Right. And she said, look, I'm in favor of energy abundance, which means North Sea, it means gas, it means oil, and it means renewables.
Yep.
So let's just do more, and companies will just find a use for the energy. I thought that was really interesting. She made softly a suggestion that she's experienced the thing that a lot of chancellors experience, which is to go into government with somewhat naive optimism about what can be done, and then the realities of office, which for me, I would say, slightly putting words in Rachel mouth, like once you get into office, you actually have to exist in reality. And so actually I think, just as a slight segue, I do think that the unfortunate thing about this particular Labour government is the general public, and rightly so, was so ready to get the Conservatives out of office that the institutions that count, and by that I just mean kind of the media, talking heads like myself, did not sufficiently criticise Labour heading into office. And so they carried into office much too much naivete. This is not like in 1997, where Blair and Brown had to be a very competent Conservative government with a good economic policy manifesto. They had to win the argument. So they didn't have to win the argument to come into office. Their majority was much too big. And so now the opposition lies inside government, and they're still fighting with this problem. So she mentioned that.
Is it not strange or pretty naive that, we know this, that the message politicians give before they're elected is very different to the realism of what they can actually do. I'm surprised that she thought she'd be able to do more, but actually when you're in power, you can't do as much. I mean, we all know this.
I think that the challenge is... So in addition, let me just add one more detail so this is clear what the point I'm making. The energy abundance point, very quickly after, Reeves made the point that the housing targets were a bit ambitious and that defence clearly has to be a priority here. And I think that the challenge that all chancellors have, so this is not now a criticism of Reeves or any previous chancellor, is we like to imagine that the chancellor is the one that sets economic policy for the government. And in a sense, it is the most powerful seat at the table because you control taxes and spending. But if you imagine a kind of hypothetical cabinet meeting, the chancellor goes last, not first. And so you have a new government, you have heads of ministers around the table, and each one of them is trained by the very competent civil servants to try and essentially scare the prime minister into telling the chancellor, you need to give them money. So once you've been around the cabinet table, every single minister has had their turn to say to the prime minister, if you don't look after me and my interests, the headlines are going to be terrible for you. At which point the prime minister has to kind of turn and say, look, you have to make this work for me. And so they come under pressure. And so the bit of room to actually play with for economic policy, I think, tends to be smaller, which is why you have seen in the past the very best chancellors have been the ones that have been in politics for a very long time. So they understand the process. They've probably been a cabinet minister themselves somewhere else, or they are an intellectual heavyweight and they can win the argument over the cabinet table. Gordon Brown would be a perfect example of that. For instance, I think to a large extent, George Osborne would be a good example. Whereas the pre-government careers of a lot of the current cabinet were fairly short, including Reeves. And so I don't think they quite knew how to play the game. It's partly why it's, of course, fallen away now, but Yvette Cooper was speculated potentially as a chancellor because she's just so experienced in Westminster.
And that seems to be the argument for Ed Miliband, as far as I can tell, that apparently he's the guy who can get things done in government.
Yes.
Just modestly terrifying for some of us, but maybe not everyone.
Or the way I'm putting it is to say can create the space to get things done.
Yeah. But we'll have to wait and see.
We'll have to wait and see.
But, well done for interviewing the Chancellor. Welcome to Quarter Chivia HQ. We get to talk to us, Steve.
It'll be mildly
very similar. Very similar level of chat, I'm sure. But we've got some chance and we've got lots to talk about. And with that, we will crack on. Hello, everyone, and welcome to Taking Stock After the Bell, episode 67, so I'm led to believe. Joined as always by James Hughes. And also welcome to returning guest, Kallum Pickering. Kallum is the chief economist at Peel Hunt, the British investment bank. Is that the brand that you're going for?
We are the British investment bank.
Long-time commentator, writes in the Telegraph. Sorry, I've omitted to pull out your full biography this time, but if you want to go and hear him from last time, I'm sure you can get it there. Kallum, welcome on this lovely Tuesday afternoon. We had UK GDP figures this morning. I had some comments in The Guardian about it, actually, at 7:05 a.m. So there we go.
Did you?
Yeah. Okay. Big picture question, just a sort of softball opener. Where are we in terms of the UK economy? Is it good? Is it bad? Is it terrible? Is it okay? Is it muddling through?
Mediocre is the best description for the UK. If you take perhaps the last 2 years and you look at the average rate of growth, it's probably close to, if not at 1.5%.
1.5%.
It's been extremely haphazard. We have had these periods of no growth, mostly in the run-up to budgets.
Yeah.
Once we get the date and we have this event horizon risk that we need to tackle and marginal activity seems to freeze. But these pauses, these punctuation marks have
speed
been
bumps almost
breaking up periods of very decent growth, sort of north of 2% annualized.
Which is what the first quarter was.
And what I think is important to note here that the mix of growth has been, I kind of have this idea of it's like the flat white economy. Why can the coffee shops have so much pricing power? And yet the bits of the economy that tend to be healthy when purchasing power is strong, sort of housing, construction, autos, are so weak. And so when you look at the mix of economic activity, there's a lot of government spending in there. There's a lot of small ticket goods, services. In the aggregate, investment's not been bad, but construction's been very weak. A lot of infrastructure in there, and then net trade's been a drag. The bit that's really missing, and just kind of as a reference point, 2010, 2019 growth averaged around 2.1%. That additional gap, that 1.5 to 2.1%, is basically all of the weakness in interest rate sensitive sectors.
Right.
So anything where you need to take out a credit or anything that the discount rate influence on a valuation makes a difference. That's the stuff that's being weak.
Business investment, cars, houses.
Yeah, we have a good old-fashioned case of crowding out in this country where it simply is true. If interest rates, especially benchmark interest rates, were lower or closer to what I would consider as an economist to be sort of neutral levels, we would have a much more vibrant economy.
So if we were sat here, it's end of June, if we were sat here in April, we'd be talking about the Bank of England potentially raising rates 3 or 4 times because we're in the midst of a Iran war. Got the chart here, actually, Alex. That's moderated a little bit. So today the market's expecting less than 1 rate hike this year?
Yes.
But the oil price has come back down. So this chart overlays the two. So the oil price is in the oily color, and the number of bank rate changes predicted by the market is in the sort of turquoisey color. And they mapped each other pretty much day for day, tick for tick from the end of February through to early May, and then they've diverged and the oil price has come down, but the market is still expecting hikes. Firstly, my view would be that the bank would have been mad to have raised rates at all, let alone 3 times this year. But secondly, why hasn't the market been a bit more dovish in terms of the path of the rates for this year?
So I think 2 things. First, there's a degree of muscle memory in markets, which is the world's faced a very severe energy supply shock, which we faced in 2022. Central banks did react to that, including the Bank of England, with a very aggressive tightening. And so this knee-jerk reaction just to reprice in that direction. At the beginning of the year, the market thought we might get 2 cuts. And as you say, when oil hit $120 a barrel in March, and then in sort of May, we were at three hikes.
It's extraordinary repricing, wasn't it?
It's a huge repricing. Huge. I would just say for myself, I've had the Bank of England on hold through summer and autumn. I did pre-Burnham, and we'll come on to this, think the bank could actually cut before the end of the year. But now I think it's going to be next year before we get cuts, just because I think a likely autumn statement is just going to encourage the bank just to pause. The second thing, though, that drove this was the Bank of England put much too much emphasis in 22 and 23 on the Russian energy supply shock as the cause of peak inflation. And sort of forgive me for taking a kind of wander down memory lane, but if you look at the Bank of England's February 2022 inflation projection, 3 weeks before the Russian invasion of Ukraine, there's a vague mention of geopolitics, but no one anticipated
because the oil price had gone up by that point.
The oil price had gone up. But the Bank of England was projecting pre-war inflation to peak at a little north of 7% in 2022. And then it peaked at 11. So the war effect is the difference between the 7 and the 11, not the 2 to the 11.
Right.
And that's, of course, assuming the Bank of England had perfect foresight with the forecast. It had revised up its forecast in the three previous rounds.
But the 7% was based on a lot of base effects from the pandemic as well, right? There was some
plus. And if we could we may have to just skip back, but there's a chart here, this one. What you see here is in 2022, there was a huge acceleration in aggregate demand, which is nominal GDP, kind of broadest measure of current sterling spending, underpinned by this massive expansion in the money supply coming from Bank of England policy and the borrowing. And that run-up in policy-driven demand was, of course, at odds with the fact that we had shut down a third of the economy, not just at home, but globally. So this huge imbalance between demand and supply, kind of economics 101 here, laid the groundwork for all of the inflation. And so my point there is to say, even if we didn't have the Russian invasion of Ukraine, the Bank of England would have overshot its target, perhaps even fourfold. The bank basically said, no, this is all a Russia effect. And markets therefore were encouraged this year when we got the closure to the Strait of Hormuz, another energy supply shock.
Right.
We really need to panic. That's the first thing.
So it's actually just a policy mistake that they should have raised.
It was obvious that the Bank of England contributed to the inflation in 2022. So did the Fed, so did the ECB. And in hindsight, admitting that a little more would have helped shape better expectations for this year. So that's the kind of the second point. But the third point is just to say, this year, aggregate demand is weaker. There's little evidence that credit growth and money growth are running hot. The labor market is much weaker. Confidence, of course, is lower. But the other thing which is critical, the world has adjusted to this short-run disruption, this supply shock, much better than anticipated. China has used its domestic reserves. America has increased production. There's been rerouting through the Red Sea. All of these adaptive behavioral responses around the world have allowed the world to adjust to this energy supply shock. So as energy prices have come down, of course, markets have taken out. But if we just go back to the chart, what I think is pretty interesting here is to see that for all of the talk of the politics we've had in the UK, from February to mid-May, almost all of the variation in rate pricing was driven by Middle East oil effects. Then more recently, what we're seeing is as the oil price comes down, the market is not fully pricing out its bet for rate hikes.
Yeah.
Like if you just take a face value assessment of the chart, we should be now priced for one interest rate cut by December 2026. This is the December contract. We're not. We're 50 basis points away from that, basically. This, I think, is political risk premium, which is starting to be introduced into UK markets. I can be a bit more precise. We're not talking about uncertainty here. The thing that the money market is afraid of, the thing that the bond market is afraid of, is the thing that the UK has committed for a good 10 years, which are policy choices which are inflationary. And so this has been accounted for in market interest rates. The danger is if Andy Burnham, popular ex-Manchester mayor, replaces Keir Starmer, which looks almost guaranteed at this stage, he pursues policies which are not just anti-growth or add to debt, but are inflationary. And that's the thing that needs to get factored into bond markets and into short-run pricing for rates. If the market finds out that his policies will not be inflationary, we will be set for a very sharp positive repricing in our markets. And I would expect to see some decisive positive economic effects too.
Yeah. The confidence thing, to come back to that, is quite interesting because in my other sort of reading of history, recent UK economic history, is that household balance sheets are relatively good. We had to change the government in July 2024, followed by Starmer and Reeves saying it's going to get worse before it's going to get better. Taxes got to go up, fiscal black hole. So you had a period of no activity whatsoever because people were waiting for the budget with the, cowering under their duvet. The budget came along, taxes went up, fine, calmed down a little bit. And then all of a sudden things got worse again. The data deteriorated. So we had to have a second budget the following November. So it's got dragged out. So we're now November 2025 with another budget. That sort of felt like a bit of a clearing event. And we'd also had speculation about stamp duty and all sorts of things, which froze the housing market up in the short term. And as this morning's GDP data sort of suggests, the first 2 months of this year looked pretty strong. I mean, retail sales were very buoyant. The housing market did spring back to life. Rates were coming down. We were expecting 2 rate cuts this year. And it sort of felt like, finally, we can put that 1% growth period behind us.
Exactly.
Confidence can rebuild and we can start to get back to a 2% growth world, which solves many of the problems that we have in terms of deficits and headroom. Is that a fair sort of reflection? And where do we stand today if we have a new government, a new prime minister, potentially a new chancellor, with another November budget coming? Were they going to do something a bit different again? Are we all going to be cowering back under the duvet and putting our checkbooks away for the next 3 months?
So I think technically speaking, you can say new government since cabinet is government in this country.
Yeah,
so we're probably going to get a new government.
Yeah.
To what extent that creates a different policy direction, let's see. Uncertainty, of course, matters. And confidence matters. But there's no evidence, in my view, that whereas the UK looks exceptionally weak from a household spending perspective compared to, say, a comparable economy like the US, that this can be explained by either uncertainty or confidence. Actually, US households don't report high confidence. No. They report just as high uncertainty. Yes. And yet US households are basically spending every single dollar which they earn. You're absolutely right to say, and it's a point I've made repeatedly, that UK household balance sheets are in good shape. Consumer credit versus income, 30-year low, mortgages, 20-year low. But when it comes to balance sheets, there's also the asset side. And this is the difference between the UK and the US. US household net worth is at an all-time high. And what our net worth gives us an impression of is our future ability to consume. When it rises, we anticipate that in future our living standards will be higher and therefore we need not save so much today. This explains for me almost the entire problem in the UK's case, which is in 2022, when the bond market corrected and the housing market in real terms corrected quite significantly and hasn't recovered, we had a shock to household net worth. And at that time, we saw the upward increase in interest rates. Those sustained high interest rates since 2022 have been a major headwind to a recovery in household net worth. Households are materially poorer in net worth terms. And if interest rates were to come down, you would see, of course, bond valuations mechanically rise, would be good for pensions. You would see housing market valuations rise. That then, pensions and housing, is basically 2/3 of household assets. And households would say, well, I now need to save less because I'm better off. So I see the elevated saving as a rational response to households actually being poorer.
Right.
And I think we've got a chart before we show one on confidence, just on the household savings rate. And we'll come to that interest rate chart in a second.
On the US side, just before we go on, I mean, house prices in the US haven't done much since 2022 either. And inflation's obviously been the same problem. But
distribution of their wealth is different. They have a much higher proportion of their wealth in the stock market.
Well, that's what I was coming on to.
Yes.
Sorry.
You've taken my thunder. So, because there are some reforms that the government are trying to move towards for the UK, which is encouraging investment.
Yep.
So things like taxing cash ISAs.
Taxing cash ISAs. It's not going to move the dial hugely, is it?
No, but it's a start, isn't it? I mean, is that for you? Is that a really important point that people in the UK start investing in a different way to try and switch that wealth, or is it always going to come down to the housing market, and that's where most of our wealth is?
Well, from the UK's perspective, actually, the relationship between consumption and housing, which is stronger than in the US. In the US, it tends to be equity markets and housing. We wouldn't be seeing such trouble if we had the house price inflation. It would just be, okay, house prices have gone back up. But I'm pretty happy that the UK households are just investing in something, right? What they choose to invest in specifically. Yeah, okay. There's a slightly separate issue with the US, which is that the US is borrowing now almost 7% of GDP at full employment. It's the biggest inconsistency between where the economy is in the business cycle and borrowing in history. This is fueling AI/defense basically through the back door, pushes up the stock market. Households see that their stock market is elevated. They feel wealthy. They spend every dollar they earn. And then the global market sees that the US economy is growing so strongly, so I don't really care about the 7% deficit. And it's a self-fulfilling cycle.
Yeah, of course.
That's a huge vulnerability on the other side. And so I only introduce that just to say, if things were a little bit more like the US, in the end, you still have a relationship between how I feel about my financial situation and consumption. That cuts both ways.
Careful what you wish for.
Be careful what you wish for. But in the UK's case, what you see here is from 2000, and this is this household savings rate in percent, real disposable income and real consumption. Between 2010 to 2019, you had this steady decline in the savings rate, with households growing their real consumption faster than real disposable income, which is how the savings rate came down.
Yeah.
In the past few years, real disposable income growth for all the inflation has been growing at least as quickly as it was before, and yet we're saving more. This is where you see this net wealth effect. When I talk about interest rates being an obstacle to net worth, I think often economists are a bit reluctant to just pick a number and say, if I thought interest rates were this, the world will look better. So I'm going to do it. I think the UK 10-year rate should be 3.5% if we had a genuine commitment to sound money policies. What that would do is take 100 basis points off benchmark rates across the curve, and we would see a material appreciation in equity valuations and housing market. Obviously, there'd be a lower incentive to save, and suddenly we don't unlock consumption. The reason why we have this additional interest rate is that we have had more inflation than any other G7 economy over the past 10 to 20 years. And this is all to do with policy mistakes.
Right.
And you know, I'm going to make a really cheap point here because I think it illustrates it well. You know, we all know in modern times that inflammation, we're all on this health kick now, is the result of bad lifestyle choices. Inflation in an economy is the result of bad policy choices. There is actually a useful parallel there.
Yeah.
And it means you're basically, this is why we shouldn't be seduced by the idea that if you could just pour more money into the economy or into markets, things would be fine. You need the real growth on the other side, which comes from supply. But this chart shows you two things here. First, that the UK is completely out of line with its longer term average. And notice if we were at the 3.5% that I mentioned,
bang in the middle.
we would be right in the middle of that,
which
that
is
G7
historically
range.
where we were in the 2010s.
That's exactly right. We're a mid-Atlantic economy. We would be sort of halfway between the US and the Eurozone. Why 3.5%? Normal growth, 1.5%, plus the bank's inflation target, 2%. Yeah. Go to the beginning of this year. Where was the US? 10, 4. Normal growth in US is 2. Inflation is 2 on target. Eurozone, normal growth, 1. ECB target, 2. 3.5 is the target. If I were Chancellor, I would be trying to aim for 3.5 on a 10. But my inflation point is key here. Notice Japan. Japan raised its public sector debt to GDP pretty much every year, right up until about 4 years ago. Debt to GDP is now falling, and yet its borrowing costs are going up.
Yeah.
Why? Because inflation has returned.
Yeah.
We're focused so much in this country on our fiscal targets. What we need to do is get inflation down.
And we had a bit of that in the budget last year, to be fair. Some of the, at the margin, railway fares going up in April, and some of the energy cost stuff was being put back into, like, there was the current Chancellor, she might not be current by the time this goes out, at least recognised the inflation problem and the element of government policy choices that was feeding in mechanically to inflation every single April.
Quite right. And Q1, the economy was strong in the interest rate sensitive sectors. Yeah. Markets started to price it in. That story was intercepted by the US-Iran war. Yeah. I think if that hadn't have happened, we'd be seeing the 10 heading pretty quickly towards 4. Okay. Inflation would be at 2. The economy would be much stronger. We were getting pretty close. The other thing that I would mention here is a short run point and a long run point, because I really can't labour this enough. If and when Burnham is Prime Minister, irrespective of who he chooses as Chancellor, if they have a period where inflation is on target, markets will be surprised at how much bad policy choices we can actually withstand and still have okay growth.
I think this
even if you had good policies, but you had some inflation in there. That was the problem with the first 2 years. It was the employment rights bill. It was the employer national insurance increase. Yeah. It was the minimum wages. All of this layered additional inflation on. So 2 points here, if I can. If you could show the chart on confidence, please. So this, for me, is the most telling chart. So this is confidence by age group. So my favorite point to make here is that young people are chronically optimistic relative to everyone else.
Very pleased to see that.
Very pleased to see that. And this is, not the sort of cheap sort of right of center argument that basically they're all communists or whatever, and finally there's a Labour government. No, they've always been more optimistic. But if you look at the age differences, so 16 to 29, 30 to 49, and then 50 to 64, 65 plus. This chart goes back to 2001, and you see that variations in confidence go up and down for all cohorts together across all shocks. Yep. But then very recently, young people's confidence has picked up. It's come down slightly as inflation's returned, but older people's confidence has come down. Yeah. Then think about what drives confidence of these age groups. Young people are much more sensitive to wage growth, especially in real terms. Older people much more sensitive to asset prices. Right. Because if you're young, if you've got assets, you've probably got liabilities, but you're experiencing the wage growth that comes through the first half of your career. Once you've got to, say, mid-50s, 60, you've generally paid your mortgage. You don't see much income growth after that. How your asset prices move determines your confidence. And we have had over the past 3 years this unusual scenario of actually fairly healthy real wage growth, which has pushed up confidence for wage-sensitive young people. I mentioned this kind of joke, this flat white economy. Yeah. But then the cyclical parts of the economy, the interest rate-sensitive parts of the economy, the big ticket, I've retired, I'm going to treat myself to a very nice car, I'm going to build an extension because I'm going to be at home more, all that kind of stuff. Yeah. It's been totally weak. And if you look at those confidence levels for north of 50-year-olds, you see real house prices explain almost all of the variation. For younger, it's real wages. And we've had this unusual divergence. If interest rates would have come down, those older cohorts would have been spending more aggressively.
And real house prices have come down in the last 5-10 years, haven't they? We had a blip in 21,
That's
22
exactly
when they went
right.
up strongly, and they've come all the way back down.
That's exactly right.
But then if I recall some of our podcasts from the early days when Husey had hair in 2021, 2022, we talked about the interest rate reset and everyone coming off their 1% fixed rate mortgages at the time, going on to 5 or 6% fixed rate mortgages, and how that was going to take a long time, but it shouldn't have a huge macro impact because the numbers each month were relatively small because fewer people had mortgages. But we're now through that reset effectively, because if the last of the people who took 5-year fixes in 2021 are now through them.
Yep.
And therefore everyone's back on on average a slightly higher rate. The bull case is that, well, actually base rates are now 3 3/4, not 5. In theory, that average weighted maturity interest rate that people are paying on their mortgage should start coming down. Does that sort of feed back into the sort of confidence aspect somewhere, perhaps for some of those in the middle, the sort of 30 to 49-year-olds, perhaps?
So my sense is that confidence is much less driven by sentiment, uncertainty, the headlines about the news, and much more driven by just people actually understand their situation quite well.
Right.
Which is that people know when their house prices are going up, they know that they're becoming wealthier. So we need to see interest rates come down by enough to start driving asset price inflation. Once we see asset price inflation, we'll see the cyclical part of the economy pick up.
So if you woke up tomorrow and you were in charge of the Bank of England and you were Chancellor at the same time, what would be your 3 sets of policy prognosis? What would be the 3 things that you do in terms of rates, fiscal, and any policy choices?
First, when you have an inflation problem, low interest rates at the short end do not necessarily mean low interest rates at the long end.
Right.
Actually, it can be the opposite. Second, the policy in the first instance should be to do nothing. The UK is on a disinflationary track. We're seeing inflation coming lower than expected this year, despite the oil price spike, because labour markets have softened and there seems to be this emerging gap between supply and demand. That will do a lot of the heavy lifting. I think the Bank of England is actually letting the data shift markets. No need to encourage that process.
Yep.
So don't do anything. And then in the third instance, no matter what policies you announce as new government, make absolutely clear to markets that you, on the fiscal side, think that the 2% inflation target is important and should be factored into policy making. I have another chart which shows this. So if you go to the one with the green bars.
This one.
Next one. There we go. So this is not as complicated as it looks. I just wanted to ask the question. Under what circumstances does the UK generally outperform? So this is G7 and UK growth compared, and the G7 I've extracted the UK. So when the bar's green, the top chart, the UK is doing better than the G7.
Which is for the majority of the time.
Which is A,
for
for the majority of the time, and B, you go through long periods of green punctuated by these periods of red. It's not haphazard.
Yeah.
So there's some consistencies here. The first thing is, and this chart goes back to 1980, we had an inflationary crisis in the late 70s. The Thatcher government had to bring markets on side, tried monetarism, didn't work because we couldn't measure them too, and all sorts of technical reasons. But then we introduced index-linked debt. Index-linked debt, inflation-linked debt, is a promise to guarantee a real return to your creditors, which is the equivalent of saying, if as a government we create inflation, the taxpayer is on the hook and they will kick us out of office. Huge credibility device. And what we see is we bring inflation under control, not fully, but enough then to see this positive effect in money markets. The economy starts to pick up. The economy then goes belly up in the late 80s. First, Gulf War creates an inflation problem. We try to stabilize the pound, which of course currencies were very important for inflationary dynamics in the past, by joining ERM, just peg to the Deutschmark, enjoy the discipline of the big core European economy. We couldn't maintain the peg. Famously, we crashed out. The month after we crashed out, we announced inflation targeting. This was under Conservative government.
Right. Okay.
And what you see is on this bottom chart, the clearest instance of the spread narrowing between 10-year gilts and 10-year treasuries. And then we go through this long period of green. Gordon Brown, Labour Chancellor, in his wisdom, 1997, announces that the Bank of England will be made independent, strengthens that commitment. We then get all the way to the financial crisis as a relative outperformer. We then lose confidence of markets because we have a bad banking crisis. In 2010, the Conservative government, with pay kudos to the Liberal Democrats for helping pass such harsh austerity policies. That was not in their manifesto, but it was critical at the time. Britain was warned that the harshness of the austerity would undermine the economic recovery. We had from 2010 until 2016 consistently outpacing growth versus the rest of the G7. Why? Because interest rates came down. Again, you see, we closed this spread. We then start to undo this work. We have the Brexit vote, which we don't manage well. We then go through COVID. We have this additional inflation. We have the Liz Truss crisis. Rachel Reeves and Labour, their failure is to inherit an economy where bond markets do not have confidence in your money policies and not to introduce some new device to discipline. That's what we need. The focus of fiscal rules is about debt and deficits, which are, of course, important. What markets care about for countries like the UK that borrow in their own currency, that they can print after all, is whether it's going to be worth something upon redemption. So this is an inflation story.
Interesting. How you've written quite a lot on kind of energy and the green agenda. How much, obviously within the UK, we pay a huge amount on energy costs. Certainly a lot more than the US consumer would pay. How much does that influence inflation and confidence? And do you think there needs to be a change of policy there?
Very good question. So first, energy is just a factor of production like land or labor or capital or entrepreneurship. A lack of it on its own doesn't cause inflation. This is not, a lack of it just means you grow more slowly. Right? I mean, especially if you don't have an excess demand problem. So it is not just as simple as saying the UK doesn't have enough energy, therefore inflation, because that would be the equivalent of saying, well, in a fundamental way, no one's quite as rich as they wish they were. Right? We just have tons of inflation if excess demand it doesn't really work like that. I'm making a more subtle point, which is when we think about productivity specifically, and we know that the UK has a productivity problem, and this chart was from a piece of research which I wrote about a year ago, which shows that the kink in productivity happens in about 2005. It coincides with UK electricity capacity declining, having risen precipitously through the 20th century, and it's declined by about 20%. It's just to say that productivity is energy. Right? I'm a human being. Right? I'm a mammal. I can only move so fast, and I can only think so hard. The way I augment my productivity is through machinery. The more energy I can deliver to that machine, the more I can increase my productivity. The machines are just fancy statues without the electricity. And so just as we say capital to labor is the thing that drives productivity, actually energy to labor is the thing that drives productivity. So there's nothing complicated going on here. You made a point about the relationship between energy and inflation. Because we have destroyed our electricity capacity with our green energy policies, which is the result of, thanks to regulation in this country, which we can get onto, it's much easier to destroy capacity than it is to build out capacity. So we've had this net destruction. We are now an importer of energy at the margin. This has posed two problems for us. The first is we no longer decide our own energy prices. Right? There's a huge political debate in this country about the pricing of energy, and we need to get off gas and we need to do these other things. Actually, it's very simple. And again, I'll use a simple model just to explain it. If you produce more food than you consume, and I don't produce enough food to feed myself, you will tell me how much I pay for my dinner. Period. We will always be paying whatever the marginal supplier wants to charge us. First. Second, The reason this is a problem now is the world is becoming more geopolitically unstable. And this is happening just at the time when you have a race for energy to fuel the AI boom. And we have, for best part of 20 years, overlaid the green transition. And so we've generated this huge imbalance between demand and supply of energy in the world, just at the time when it's intersected with the UK no longer providing enough energy to supply its needs. And so now this situation means we are more vulnerable to inflation. We have this shortfall, which needs to be met by imports. And then we have these repeated global supply shocks, which push up the global prices for energy. And we have to pay that. Again, America provides a useful point here, which is America is a net producer of energy. It's also a net producer of hydrocarbons. When energy prices go up, yes, consumers and businesses pay more, but they pay more to domestic producers.
And that money stays in the country.
That money stays in the country. We, of course, have to send it abroad. So structurally weak supply doesn't cause inflation. But when you don't meet your demand with supply and you import the difference, and then the world has a problem in this particular area, then, of course, that is inflationary.
And is this is really up there in terms of importance of policy?
I don't think we get to anything like the kinds of healthy growth that we need to meet our aging population needs, defense spending, or productivity until we do the very basic thing, which is produce enough energy to keep our own lights on over winter. It's not more complicated than that. And it's amazing how forgetful we have become in this country, because we were the first country to industrialize. We were also among the first countries on the second industrial revolution to industrialize. And on both occasions, underpinning it was an energy revolution. All of the strong growth countries in the world are focused on expanding their domestic energy production. The part of the world where we have had some of the most exciting growth over the past 20 or 30 years is, of course, the rich parts of the Middle East. And they're doing it on the back of an energy boom.
Yeah, of course.
One of the richest countries in Europe, Norway. Right? It's an energy-rich country. France, for all its problems, has been relatively insulated in the past 6 years following these two big energy supply shocks. Why? Because it serves its own energy needs.
Was it 80% nuclear? 70% nuclear, roughly?
And do you think that's... I mean, this is my concern with potential new chancellor, is obviously the green agenda that comes with Ed Miliband. Do you think that's starting to be recognised, or he is blinkered to that green agenda?
Just to follow up on that, his argument is that we need to wean ourselves off fossil fuels because we can't be in hoc to global energy markets. And that is, I'm sort of sympathetic to that idea. But I guess that the answer would be, well, the problem is that the alternative to fossil fuels is much more volatile and much more expensive overall. Is that a fair reflection?
So it's very easy to just get into the weeds of energy policy. So the marginal cost of renewables, the argument is it's zero, because wind blows fairly often and the sun's basically shining all the time and all the rest of it. And we know that there's a finite amount of hydrocarbons, and where we might have some gas that could be fracked, it's quite close to where people live, and maybe the North Sea Basin doesn't have as much. And so you can very quickly get to an argument where the UK should go towards green energy in order to provide security. But I would say there are 3 points here which are completely left out. The first is, all along, if your objective was to get cheap, stable, reliable electricity, nuclear has been the answer. We've known this for the longest time. First. Second, an economy with such a shortage of investment and productivity intensive activity, which manufacturing is, should not be saying to private companies, we won't let you speculate your own capital to see if we've got some hydrocarbon under the ground in the North Sea or somewhere else, or open the mines in Wales for precious metals or southwest Cornwall. The third, for me, which I think is actually most relevant, is that there are more uses than just burning it when it comes to gas and oil.
Yeah.
And so just to extract this stuff for normal exports would actually be quite helpful. It would contribute to economic growth. And so for me, the reasoning always goes backwards, which is people already decide ex ante what kind of energy system they want. And by the way, I think I should just point out here, like, I'm not against net zero or the green policy. This is not me. I am in a way just a pure markets guy when it comes to energy. Yeah, on the one hand, you have, no, actually, it's drill, baby, drill. It's all about oil and gas. Like, forget about all of this stuff. It's too expensive and it's making us poorer. On the other side, no, don't be a troglodyte. We should be pushing towards green energy. It's good for the world. Yes. My argument is the UK faces the highest electricity costs in the industrial world. We need to increase our defense. We need more economic growth. We need more investment. We need to fuel the AI revolution with ample energy at an attractive cost. The UK is a great place to do AI for all sorts of complicated reasons. And therefore, let the market just go to work. Say to energy companies, you can charge the highest prices in the advanced world. Go and make some profit. The only way you make profit is by increasing marginal supply. And what will happen over time is we will find that the energy system in the UK develops in a way that is most efficient for an economy, which is constrained. And the market is the thing that can resolve this. The central planners can never figure this out quite as elegantly as the market. In such a sophisticated way. So it may actually be that in the short run, we do lots more hydrocarbon stuff, but then as the technology develops, there's a medium-term plan for modular nuclear reactor supplemented with all the green stuff. And the role of central government is to simply say, we want more energy in this country. We want to drive down prices. We need security for all these complicated reasons. We are just going to use all of our legislative might to say yes. That's it. That's basically my energy policy. If you want to do it, the answer is yes, perhaps with the exception of dirty coal.
Yeah, that's fair.
And the market would actually find a very quick solution to this.
Quite quickly.
Very quickly, because the prices are so attractive.
So then, I mean, what are your expectations then? I'm trying to wrap up for the sort of next 12, 18, 24 months for the UK. I mean, are you glass half full? Despite everything we've talked about?
I'm extremely optimistic in the very long run. You know, if you look at living standards in this country, in the advanced world, they look like a hockey stick. Nothing happened through history and then everything went up. And so when I look at the potential for improvements in energy, in AI, in transport, in medicine especially, it strikes me that despite the sort of arthritic pains that we've got as an aging population, we're going through this kind of adolescent growth stage economically. So it's kind of a Keynes idea, this from the 30s. Right. And so I think we figure this out, and you know, social change is part of it. If I were to say on a sort of 2-year view and then a 5 to 10 year view, my suspicion is that a Burnham government will, roughly speaking, get it on the inflation front. Right? There's enough now learning by doing within this Labour government to realise we need to keep inflation down. So even if there's some policies which markets may not like or they're just objectively anti-growth, I do think inflation is heading lower on a sustained basis. I think interest rates come down. And I think we see an improvement in economic performance.
Okay.
That's the first thing. The second thing is that most of the debates around the size of government, role of government, energy policy, defense, tech exist more intensely just down the street in Whitehall than they do in the general public, where the general public want energy abundance. They want technological innovation.
Yeah, of course.
They want to own shares. They want to own homes. They want to see economic growth. They want to see more defense spending.
It's pretty simple, isn't it? I mean, most people wake up, virtually everyone wakes up in the morning wanting to have a better life at the end of the day than they had at the start of the day.
Yeah.
Right. And if you take that as a philosophy in general, then that's why we as a species move forward.
That's exactly right. And look, for me, when it comes to the UK, I definitely have home bias on this. So take everything I say with a pinch of salt. But I just say that Britain has, over the past 10 years, relied very heavily on its historic institutions. And even though the situation has been very frustrating for many ways, if you were to say the UK has extracted itself from the European Union, had a fundamental debate about what kind of country it wants to be economically, run into some very obvious problems with its energy policy, make the list, and yet we have had fairly stable politics compared to other countries. Like, okay, we have our populists, but not like in the continent or in the US. They don't want to change the institutions. They don't want to change the constitution. And what's more, through that period, we've had growth of about 1.5%, maybe slightly more. Inflation's been around 3%. At any point in history, if you would have had that kind of environment at a point in difficulty, you would have taken it. So, I think the final point for me should just be that, for every generation, its worst problem is still its worst problem. Right?
Yeah.
When people say this is like the 70s, well, of course, like for like, it is not like the 70s.
Definitely not.
But given that it has followed fairly long period of stability, it's really bad. And so it feels bad. Eventually we'll figure some stuff out and we'll get back on track. And I think we're working our way through problems. I don't think we're accumulating problems. And so on a 5-year view, I'm actually fairly optimistic. I think we do get the energy policies right. I think we do bring inflation under control. I think we have much needed sensible debates around things like triple lock and welfare spending and the balancing of transfer payments versus
I think that's
defense.
That's coming up more and more, isn't it? Kind of triple lock and welfare payments and getting our head around that, because ultimately, tax receipts and revenues are the highest they've ever been.
That's right.
It's the spending that's the issue. And, you look at defense budgets, which is obviously, a real political issue at the moment. You look at all these extra funds that are required, whether it's build out the energy supply, whatever else it is, but it's being sucked into one place, and that does need to be discussed. It needs to be I don't know, it doesn't need to be completely overhauled.
No, not at all. But you come back to the 70s, and the 70s, it's not as bad as the 70s now, but at the end of the 70s, ultimately the electorate decided to vote for something different, which was a smaller state and less bureaucracy. And I sort of feel as though we'll get to that point. I'm not sure when, whether it'll be next time around or not, or maybe even this government do, but we've sort of reached sort of feels like we're beginning to reach a point of somewhat no return, in a way, that things will improve and we will get through the problems we've got, and we will return to, if the US grows at 3%, Europe grows at 1%. At the moment, we're growing at 1.5%. Well, we should be at nearer 2.5%. We should be nearer the US and nearer the Europe.
Yeah.
Now the politicians of the last 10 years will say, well, we've grown faster than the Europeans have. Well, that shouldn't be our baseline. Yep. That shouldn't be the comparator. No. It's like a fund manager using the wrong benchmark. We should be comparing ourselves to US growth, which has been 3.5%, and we should be aspiring to get there. And then, a few tweaks, a little bit of government getting out of the way, and I think we probably can. Is that?
I think that's right. And if you, there's actually a nice report that comes out called the British Public Attitude Survey.
Oh, yeah.
So it's a very nice report. And it just asks a very simple question, which, in summary says, do you want the government to be bigger or smaller?
Mm-hmm.
And about 20% of the public would like it to be smaller, which doesn't sound like a lot, but that's twice as many as a share as in 2010, when we did actually go through a period of austerity, and twice as many as in the early 80s. 20% is quite a big swing vote. Yeah. And again, this is where the problem with modern debate, of course, it makes it more exciting for social media and all the rest of it, is the sort of compromise, which is where good policy lies, is not the thing that shapes the way that the debate forms. And so it's not that the UK is now some, sort of overly centralized, taxes are way too high, like centrally planned state that's just ever regressing, and actually the solution is unfettered capitalism. We're really talking about fairly nuanced changes
At
here,
the
like
margin.
taxation as a percent of GDP is 39. Government spending as a percent of GDP is probably like 43. For an economy like the UK, a mixed economy, which should aspire to have a national health service and good education and to look after people that need help, you can do most of that with taxation at 34, 35% of GDP and government spending. You can still borrow a bit, right? Let's be realistic. At 36, 37. The moment you get from 44% government spending as a percent of GDP to 36, 37, and you take taxation down as a set, see the economy just come to life.
Yeah.
You know, this is where I think that people need to be persuaded that you are gaining more than you're giving up when you just tilt back in this direction. It's why I liked this chart where you just see when government just takes a step back and brings inflation down and rates come down, suddenly that's when the productive side of the economy, the private side, starts to grow. And actually the good news is, the opportunity rather, is to say that once a government being too big is a headwind to economic growth, the argument that government cutting spending is bad for growth no longer stands. You just need the courage to do it. You know, who can win the argument to say you can take care of yourselves in these areas much better than we can?
I think the other tailwind we've got is it's 10 years since Brexit, and the UK, we've had our problems over 10 years, but ultimately we haven't capitulated. I think foreign companies and investors are seeing that again now. You know, you've got loads of instances. You've got JP Morgan building big new offices here and choosing the UK as a new central hub. You've got the AI and the tech side, which, you know, we don't celebrate that very much, but actually we're phenomenal at it. There are things moving that will help us. We've just got to make a few policy decisions and get over the tax burden and as you rightly say, get inflation under control. And I think we'll be used as that gateway again. It's not as we feared when Brexit happened. So
well, look, we need to organize our thoughts a little bit. I mean, they're not here, but just generally, there's intelligent life outside of the European Union, right? The idea that Brexit would be a kind of a long-term disaster. No, that never made sense. Even if in the short run it introduced costs, and it did. And to be clear, I did argue against Brexit by reasons I still stand by. Second point, which I think is just worth mentioning here, is that the fundamental constraint on UK exports and industry is the energy shortage, not trade barriers. This is really, really important. If we were to have a better trading relationship with the EU or any other country, which I advocate, our imports would rise. It's the fact that we're not taking the stuff out the ground and making stuff that people want to buy abroad. That's the constraint on our exports. Third point, and we need to have a bit of a sense of humor about British history when we think about this. Judging Brexit on the first 10 years, this extraction from Europe, for want of a description, is for me the equivalent of judging the Reformation on the marriage record of Henry VIII.
Very good. That's a niche historical reference.
Don't look too soon. Right? Look at the capitalist revolution that followed in sort of Protestant England or whatever. It's two things can be true at once. That Brexit is bad for the economy in the short run, but that in the long run it provides more opportunities than staying inside the European Union. That's fundamentally what we're facing here. And so, can the UK make use of those opportunities? Yes. Again, I think our institutions, imperfect as they are, they serve us well in the following way. When we don't have an obvious, clear consensus around a good idea, they are quite good at stopping things from happening. It's kind of yes, Prime Minister effect.
Exactly.
However, when there's consensus around a good idea, generally they do help. And so it's one of those things where the blur between politics and economics now is such that you can't help but making the occasional political point. I fully understand why people criticize the BBC, for instance, but let's not forget that we are accusing this institution of violating the standards which it itself set and determined in the first instance.
And
The same is true with so many things, with law, with democracy. Like if you're criticizing institutions which establish these standards in the first place, be very, very careful at throwing them out.
Totally.
That's the danger in all of this. And so working within the system to get some reform, I think, is the cure, even if that takes longer. And I think that's roughly what the UK, to the frustration of people, is trying to do. Take the number of executive orders you see in the US, or the constant need for constitutional reform you see across Europe. In the UK's case, we have this kind of evolution, this gradual evolution. We kind of nudge things around a little bit. And so I don't see anything sort of new going on in the UK. I see it as being well within our historical characteristic. And so, we started this conversation asking me if I'm optimistic. Yeah, I think I am pretty optimistic. I just think that the desire to rush can often create way more problems than you than you think in the first instance.
Kallum, it's been a treat. Entered on a hint of optimism. Are you optimistic, Yuzi? We're off out rushing out to buy UK small caps.
I'm always optimistic.
Do you know any brokers you can go and buy some off? You can catch Kallum on the social media site formerly known as Twitter, where he puts out some interesting observations. And in the Telegraph fortnightly in the Telegraph. And widely on the media. Thank you very much for your time today, Kallum.
Pleasure. Thank you, guys.
Yeah, it was great.
Any emails or questions, let me know. Jonathan.raymond@courtachieveit.com. And we look forward to seeing you next time. Thanks very much.
Thank you.